Hello and welcome to another update video about Ethereum. Really painful to watch at the moment, this price action here. Let's talk about the short-term bullish and short-term bearish scenarios. Let's first of all talk about the base case on this chart. So what's the main thesis? The main thesis is bullish for Ethereum. We are above the support main support range here. Support is down at 1677. That doesn't mean we have to go down all the way to that level. It's not a target. It's only a support level. And below that level, I have to change my bullish thesis for Ethereum probably. Or at least have to change the overall wave count that we sometimes talk about on the daily time frame. But in this video, let's stay on the 1 hour time frame. The idea is that a wave 1 completed on the 9th of December. That's unchanged. Also, that this here is all a correction. It's a long correction. You see that. It's a long sideways correction, and the market hasn't really provided clear information that a low is in place yet. So that's, I think, valuable knowledge. The move down was part of that correction. I call that a wave W. The move up was part of that correction. It's an X wave. And the move down was part of the correction as a Y wave, WXY. So that's technically a complete 3-wave correction. Technically speaking, the correction could be over. The problem is with the WXY structure, first of all, it's not so common. Well, it is kind of common in crypto, but not as common as an ABC structure. In an ABC structure, we should ideally see one more wave down. But okay, let's assume it is a WXY. Then still, with an overshooting X wave, even that's a little bit exotic. So I need additional evidence to say that we have indeed bottomed. It's possible, okay? So therefore, we have the wave 2 here already highlighted. And then the third wave would be the next rally. That's basically short-term bullish, and short-term bearish would be that the move down, WXY, was only an A wave. This here was a B wave, and we come down once more in C. Or even, and that's another possibility, 1, 2, 3, 4, 5, even though that would be a very high wave 4, in here an A, B, C structure, and that the C wave is basically unfolding and not a WXY. But anyway, there is basically still the potential for another low. I see it could go different pathways. There are different perspectives here about how this correction could unfold. That's not uncommon in corrections. There are always different interpretations that are possible. I think the main takeaway is that, yes, I'm very open to the idea that we could have struck a low, but it would only be, within a very messy and, let's say, a bit of an exotic WXY structure with an overshooting X wave. So I don't fully trust it until I see further evidence. And the analysis tells us what exactly we need to see to get that additional evidence. So what would be the evidence I want to see? So it's basically, I need to see 5 waves up, okay? So from this swing low that was formed on the 23rd of January, this could be a wave 1 in the yellow count. This could be a wave 2. This could be a wave 3. This could be a wave 4, very deep, but possible. I provided a support area here for you for this yellow wave 4. Slightly undercut it, but it still was not a sustained break of the golden ratio level there at 2,250. So we give it the benefit of the doubt, and it could now form a wave 5 to the upside, and then we have a complete leading diagonal. Ideal target here would be around 2,425. At least there is a resistance range here and some Fibonacci confluence around 2,420, let's say, to 2,455. So I'm watching this as a potential resistance area here, should the price approach it. But yeah, with one more high above the last swing high, which formed at 2,392, I call that a 5-wave move up. That's first confirmation that a low has formed. Then the upcoming subsequent corrective pullback would be a wave 2. So wave 1 to the upside, wave 2 to the downside. If it holds a higher low in wave 2, then breaks above the wave 1 high, then I have confirmation. already the first 5 waves up in wave 1 would be a level of confirmation that a low is in. The 3-wave pullback would be the next level of confirmation, and then the 3rd wave to the upside, obviously, as we go, probabilities increase and so on, and the layers of confirmation increase. Then, obviously, in the bearish scenario, this could be a 1-2 setup to the downside. Here, this wave 2 still has a little bit more space, This is a possibility until we get 5 waves up. The 5th wave to the upside would invalidate the direct bearish path. I think at the moment it's about letting the market show us what it wants to do and then basically act on it. There is a 1-2 setup here for a potential short trade possible. Yeah, I just don't see a very, very clear pathway here because we are obviously basically, if there is another low, it's sort of one more low in this structure here. And shorting into a support area, that's, it's just not shorting in a bull market. It's nothing I would do. In addition to that, there is a bit of upside pressure across the market. I'd rather use pullbacks, to find positions for the 3rd wave rally. There's just a much better reward to risk ratio for the upcoming 3rd wave rally that should take us to 3,500 plus. Yeah, not much more to add, I think. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.